All right, man. Let's turn that down. Yes, 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 yes. Me, hope everybody's doing okay. Hopefully you can hear me. Let me know. Well, I guess you can. I heard some people saying they heard the music. So, the only thing when you do these private links like this. All right, so we got 11 people, man. Hopefully they can catch replay. I know most people are working or at work, but this way we can just have a little class. I'll try to keep these short, man. I get long-winded. I'll try to stay on topic here. I wanted to talk about the box support and resistance and stop losses. One of the biggest questions I get asked all the time is people, stop losses. And all of this is personal decisions, right? Hopefully you can see me and hear me. Let me know you can if you can see me and hear me if possible. I was trying an app called Riverside for this. It's way too complicated. I'm gonna try it one more time. I'm doing an interview with the guy. He's a podcaster. I'm gonna do an interview with him and try it one more time. We're trying to do that with that group Campfire Real Estate that I do stuff with. I bet that's right in the way, huh? Yeah, we'll leave that off for now. I usually try to record from multiple ways, but we're just testing this out. You could do Zoom. I'm gonna be honest, I have a hard time with Zoom. And the reason I have a hard time with Zoom is I can hear people. Okay, it looks like we're all right. I can. The volume sounds good. Okay, sorry, I was listening to myself. It's delayed when you listen to yourself, so you can't listen to yourself. Otherwise, you'll hear yourself delayed, and that's kind of a mind messer. There's different platforms for doing this kind of stuff, man, and some of them are more tech heavy than others. And what you don't want is like you're running a spaceship. You're like messing with volume, messing with the thing. It's really difficult to try to talk and teach a class when you're messing with the technology. It's actually really tough. For me, I'm not trained at this. I'm not a tech guy. I'm not a speaker. So it's hard enough just to talk. So if you remember from the newsletter, I'm gonna try to make this more interactive with the newsletter. If you notice, I'm delayed at times. I don't necessarily change the chart. If it's still in a stage 2, I don't think I need to keep updating it. We have enough sense we can look and go, okay, it's still in the stage 2. I try to change charts when I think shit's actually changed. So right now, I did Bark as a trade of the week. These trade of the weeks, I'm putting that out to the public, not just you guys. I mean, I tell you guys first. This is just so you know, my own selfish, it's for marketing. Not that the trades are, but me putting them out or sharing it, I don't do all, but I got to pick some. That's the only way I know to advertise. And that's just for me. So sometimes I'll have people go, well, why am I, if you're just going to tell everyone, it's like, bro, I'm not telling everyone everything. I'm telling them about this one thing so that I could get them interested. We want more people trading with us. I think that benefits us all. Oh shit, 25. That's cool. It's like 5, people are at work. Hopefully this saves. I haven't done a lot with these unlisted. It's unlisted. It's not private. You can do private, but you have to actually invite each person individually. And that seems like a real chore. So we'll just list it as unlisted. We're looking at Bark. And when I was looking at this, I'll tell you what I was looking at. That's our pattern. There's the original boxes that I drew. Now you see what I'm seeing, meaning the target zone, the money flow is price has memory. Wherever price has been before, it tends to stop on the way up and it tends to stop on the way down. That makes common sense if you think about it. That's how we get the term support and resistance. Most people define support as 2 or more points stopping there. Some people define it as 3 or more. In other words, you need more than one. It can't be support with just one, but that is an anchor point. So as we look at charts, like that's an anchor point, but it can become a zone, and that's not support. If you notice, I just did resistance and I did a box, meaning it's in that general area. This is not science. It's not, the target's not $17.51 and it's exactly a penny. It's like, no, it's kind of in that zone. And if it was to rip and move into that zone, that RSI is probably going to be close to going extreme. But let's say it's not. Let's say on Bark here, it worked in our favor. And now this is just trading we're talking. And you saw on this day here, it looked like it was working. So I looked smart there. It's like, oh, good trade. And then shit changes, right? Well, inside of the money flow, we have a plan for whether it goes up or whether it goes down. And the stop loss, STOP-loss, is an order that you enter the market. It's an order. It's like, hey, if this stock does this, you do this. And so it's a way for you to predetermine, an action. So all it is you're placing an order. Sometimes we get mad, our stop loss got hit, and it's like you're getting mad at an order you placed, meaning it did what you wanted it to do. So don't see it as a negative, see it as kind of a positive, because it's like, hey, if it hits here, I want out of this deal. And when I'm looking at this, what did I say? Stop loss 170. I don't use hard stops, and we'll talk about what a hard stop is, and won't be stopped out at the open. Meaning in this current configuration on the chart, there's tourists all out in front of my house, man. A second ago, a dude's looking in my window. Wife has Halloween decorations up and this and that. So people stop and read and take pictures of your house and shit. Anyway, I'm playing off this pivot point. So we're trading here. Part of trading is taking losses. Look where we're at. Trade went from looking good here. Notice it was drifting higher. Let's hold this back. Notice we were drifting higher and then we turned to go down. Well, we have a plan for that. It's called a stop loss. And a stop loss is an order that you put in that says, hey, if the price hits here, I want out of this deal. Just give me my liquidity. I'll take the money. And often when you do a stop loss, you're going to take a loss in that you're going to have less money than when you got in this deal. That's trading. Okay. And you hope if it moves up and hits this, you're going to have more money in the deal than you had down here. And that's trading. And there's a loss and there's a profit target. It's two sides of this equation: stop loss, profit target. So if we enter a trade, we need a stop loss and a profit target. And that's trading, right? That's not investing. People can get that confused in their head. And sometimes you can enter a trade and then say, fuck it, man, let's just call it an investment, or let's just hold it. And as long as you know you're doing that, as long as you know, like if you acknowledge if this breaks this, I mean, we're going down here. That's what the money flow says, right? Wherever price has been before, it can go again. And that's how we get support and resistance. That's how you get double bottoms and head and shoulder patterns that you hear other people talk about. It's how you get Fibonacci retracements. That's how you get Elliott wave setups. It's how you get Wyckoff patterns. It's how you get all that shit comes from price hitting and doing patterns and repeating. But people use different time scales and different triggers. And that's why you have all these different strategies. Hopefully that's not too much, man. What's up, Mike? Mike, man, we got to hook up this week, bro. Why are you being all elusive and shit, man? Like trying to hook up with Elvis, man. It's like you're an influencer or something. I can't find you. Let's see. If you knew Mike, he's kind of an anti-influencer. Doesn't even like social. A lot of my friends don't like social. That's so weird to me. I'm not making fun of them. I get it. It's just I'm on it so much. It makes people nervous. All right. So my target was 170. Let's clean this up, man. Save changes. No. Oh, good. I forgot. It does save your previous. Excellent. Tidbit tip. Stock charts right there. If you save this and then you add some new shit and hit save this, no, it goes back to what you drew. So draw these out, print them off for yourself, man. Print it off, mark the profit target, mark the stop loss, and say, this is a trade. When I'm entering this trade, there are many trades, but this trade is mine. And here's the plan. And that's trading, putting in a plan. So my stop was 170. We're at 173, means the fingers on the trigger. I don't use hard stops. So I don't have an order in. I don't have an order in because I'm old and I'm superstitious. And I think traders look for these orders. Matter of fact, ordinarily, and if I wouldn't have already wrote this, I should change it. But ordinarily, that happens so much that I bring it down a little. Ordinarily, I'll trade a little looser. And I also don't put them in as hard stops, means it's not like you might do that because you're like, fuck, I got to go to work. You're like, cool, put in a hard stop. Just remember, it's going to hit, even if it just tags it for just a second, pow, and then turns around and goes and closes up on the day, you're out. And so a lot of times I begin to wait to the end of the day because sometimes this number here will pull back up into the box. And if you run that tight stop or automatic, you know, these little one-offs, bam, knock you out. Now, if it keeps going, then it kind of helped you out, right? So the one thing we can say about doing systematic, automatic, hard stops that you enter is it forces you to actually take the capital, take the hit, step aside, and look for the next trade. That's trading, man. Okay. And a lot of times in trading, you don't necessarily want 50, 60 trades going. You want, you know, however many you think you can manage based on your time frame. Day traders are trading one stock, man, two stocks. A lot of people specialize. They're trading Kohl's and they trade Exxon, and they're just, these are the two shit they trade every day. They're looking for setups. That's one way of day trading. Two people that I've ever met that actually made a lot of money day trading. The one guy only traded Exxon, huge positions of just Exxon. And I've met people that made a lot of money swing trading, and they specialize in like MLPs. It's all their swing trading, man. ET, and they can keep up with the news. They can watch the setups. They understand the fundamentals, and it becomes a game like chess. Instead of playing chess, they play MLPs, and they're looking to buy under and trade up. And then if they think the market is turned, they're looking to short it or write it down. And they're trading inside of that one thing. I would encourage you to find something that's your thing, man. Like, you know, this sector, it can be of great advantage to you. I'm not saying you have to do just that, but just knowing something can give you courage. It can help you understand value. Trading is about value. Investing is obviously about value. Trading is about targets. And if we look at this chart of Bark, we have a previous high where price has respected it twice. Now, not only is it respected it, look left, man. Look at this. That is beautiful. Look, we don't know why this shit is, man. I just know that it is. This is support. Or here it's resistance, right? But it was what? Support. Support becomes resistance. When they flip, they go reverse, man. So on the way up. So if you have that little handbook that I'm slowly moving at turtle's pace updating, but as long as you have it, when I update it, it'll automatically appear on your end if you hit refresh. So that flipping books, whenever I update it, if you hit refresh, it updates, which is pretty cool. I just haven't talked a lot about that or thought really on how to use it to our advantage. Let me see, man. So just so you know, that's what the report is under. So if we look at the report, and I always come to this page here because I want this ingrained in your brain. I know you've seen it a million times and it gets old, but it's like, it's core of my trading strategy is the 1 to 2 to 3, 3 to 4 to 1. So if you're playing the short side of the game, you're thinking 3, 4, 1, 3, 4, 1, 3, 4, 1, 3, 4, 1 in a down market. Is the S&P in a downtrend? Yeah, cool. Then I'm thinking 3, 4, 1, 3, 4, 1. I want to look at threes, catch the 4, and I want to take profits on ones. So if I'm shorting the SPY, you could be shorting SPY a whole bear market. And guess what? In the midst, it has rallies. So it'll go down and then bam, it'll turn, it'll get oversold, rally up. You got to be out. So the shorter players got to be out. As the short player gets out because their capital's going the wrong way, they got to cover, they become buyers, pushes prices up. And that's how we get these 4 stages, price moving. So the guy I learned it from was doing it only for investing, and he's doing it on a weekly chart. And I'm like, wow, if you bring this concept of the 4 stages instead of just 3, a lot of people were doing just 3. If we bring that concept of 4 into the market on a daily chart, we can begin to see this pattern that I started calling it the money flow. Other people call it different things. And it was just this moving, you know. And I tried to connect that to nature, that like everything is fractal, like the way the waves move in is a pattern, the way the oceans move is a pattern, the way it rains is a pattern, hurricanes set up with a pattern, tornadoes happen because temperature and this and that, and they all come together as a pattern. Well, and I just began to observe in charts, this is just human emotion, man. This is people coming at it. And right now people are like, fuck owning bark. Market looks like it's going down. And if we look, this is in a downtrend, right? So what we were trying to play is a move sideways that breaks out and runs up to the previous high, which would be what? Money flow pattern. And it would be from 1, 2, 3, 1, 2, 3, 1, 2, 3 side of the pattern. 1, 2, 3, 1, 2, 3. I want 1, 2, and then I'm taking money and I'm out 3 and 4. I'm out of here, man. If I'm trading to the long side, and the short side guy's flipping, that's a buy signal for him. If you're selling, he's buying. On the opposite though, right? So I would pick a side and I would stay with that for a while and be patient with yourself. And I would get in good at this, like just do this, put on some just trades. 170, I'm out. Target 265. I got $1,000, whatever it is, man. $100. Let's say it's $100. At 170, you're going to get your money back. You might bring that down a little, right? So if we don't hit it today, I don't do it. If it gaps down, you don't go, oh man, I knew I should. No, man. Had a guy text me. I think I pissed him off. He said, yeah, man, I went ahead and closed it out. I was like, well, you were wrong and you closed it out early. Shouldn't have done that. Now he may end up being right, but he changed the plan, man. He couldn't stick with it. It's only been 2 weeks, man. I'm like, you're trading with me. We got our buy signal. We're not fucking 12 bars in and you've changed it already, bro. So now what if this turns and tomorrow rips up and we get up in here? I mean, is that theoretically, is that impossible? That couldn't happen. It's like, of course it could, right? Now, but guess what? What if he's right and tomorrow we open down? He's going to be like, well, that was smart. Now he's out of he's out of the flow now. Okay, bro. So what's the stop loss and target on the next one? Since you got rid of your systematic way of doing it, now what's the next one? We're guessing again. Fuck, I feel like that's going to be our play. Maybe sometimes, and I talk about calling audibles, but it's like, man, while you're learning to trade, man, really take some of these decisions off yourself and just be like, this is my target. This is my buy signal. This is my setup. This is my stop. Hey, I'm going to go play backgammon now. Like this is set up for me to play out and see what happens. And I don't need to stress about it. And I'm down $40. All right, whatever. You might lose 100, win 6. Like it may play out that way if you're trading. And I would encourage you to separate this from your buy and hold, because it's different mindsets. It's different ways of using the money flow. It's different strategies. There's no stop loss in investing, man. There's getting out of something. I don't know how you're going to be a successful investor in the stock market if you don't take advantage of down moves and buy when other people are. I don't know how you win over a long period of time. Short time, yeah, you may save yourself some pain. Maybe it goes down. But if you don't have another way of re-entering, like I've never met anyone that's pulled that off, and is why it's hard for me to get behind when it comes to investing. Trading, I get it. Take your money, sit on the sidelines. I can't do it. It's hard for me to do. I like trading. So if this breaks, we expect it to go into this range, right? Hold on. We expect prices to fall down into this range. Remember, it was this range on the way up into here. Not perfect, just in this zone. We're going to watch the RSI. Well, guess what? It'll be in this zone, and we'll watch the RSI. And it's going to go up or down. And you could have said that here. It's going to go up or down. And it broke. And once it went above the 20, I got a stage 2 breakout, right? I got this. And it's going that way. This is my last chance to add. I don't want to add as it goes any further past this because the trade gets riskier and riskier because on the 3, I'm taking it down or I'm taking my profits. And so I'm looking at each transaction like this if I'm trading them, And Bark is a trade. I mean, I don't want to ride this to 50 cents. The reason I'm using a pivot point, and you might say, why use 10%? Okay. I don't know why that's your magical, why not 12? What if 15 improved your earnings? What if an 18% stop loss doubled your return? What if, sometimes people, I use a 10%, okay? And I talk a little bit about this in the money flow, but the more and more I'd watch, it's like 10% on triple leveraged silver is a fucking day in the market. Like one day you're out, like, so that, the stop loss has got to be connected to volatility, right? Meaning, 3%, 9% AT&T is a big damn move, but in a leverage ETF, it could be an afternoon. So we got to look at volatility in what you're trading. I mean, the more volatile it is, I think the more room you got to give it, or be cool with just getting churned. Maybe that's fine though, because you only need to hit your direction. Quick losses, short losses, nothing wrong with that if that's your strategy. It's just not mine. So I just teach mine, man. But I guess you got to define that for yourself. But I do know this. Price has been here and stopped. We've seen it. It's done it 3 times in the past. That's a logical target based on charting. That's what I use, the pattern. Same here. This is either a stage 1 or it's breaking down into another, a continued stage 4. Stage 4, it went from 1 to 4. And it's looking more like it's going to do that than go up, right? But we're in on this pivot point, so my stop loss is right around in here. So what I'm watching at right now is like pennies. This thing is pennies away from what I said was my stop loss. So what do we got right now? It's down 4.42%, 173 with a low of 171, and my stop loss is 170. Whew. Damn, playing with a man's emotions, man. They're playing with my emotions, but it's, our stop's right in here, man. And so we're watching this, now what? As we draw it out, we got a little box building here. It is what it is, man. And we were hoping that was a 1. It was going to rip into a 2, but man, maybe it's a 1 that turns into a 3 and it just breaks down. So I hope you're seeing that in your mind. That's what I'm trying to get you to see. The 1 is a 3. The 2 is a 4. It's the bipolar nature of the market. 2 is just price going up. 4 is price coming down. And as I watch this in a trade, that's what I'm seeing. 1, 2, 3, 4. I was hoping this was a 1. So hopefully you see what I'm trying to do there. One of the things working against this trade, let's be honest. Let's pull up another chart. Let's be honest, is the SPY. Oh, what is that shit though? So Young International. So Young. Let's see. You see what we got going on here on the SPY. It's basically the same story. Our pivot came back in the box. That's usually so bullish. And price stopped where? Right where it has stopped before. Totally what we would expect on a down move. It's in that zone, right? It's in that zone. See where it's stopping? Well, if we look at Bark, what was I saying? If it comes down, it's going to be in that same zone, man. And if we go up, we're going to stop in that same zone. Price finds those levels and support, like what you saw down here. A pivot point or an anchor point is 1, right? When it's checked and held, that's what? You've now got support. 2 zones. You can draw that out. Some people say, man, I need at least 3. Here's third one. Right there. Bam, holds it. I mean, and then look at that. Price is above the 20. So if we're looking at the money flow, what are we seeing? 1 held. See where it says accumulation, and you see the little line zigging? That's price banging it. The line is the 20-day moving average. Holds it, 2, 3. Now we got 3, and then starts to move higher than what we assume it's breaking out and running. So if I'm tracking this stock, boom, that's my go. We got the RS. We know the rest, right? It's going to stop at previous high. So as you're putting this together, look for those zones, man. Look for these zones of support. Look for these zones of resistance that become support. Like they tag at the same places. These become obvious targets for trading, man. How many people we got on here? I don't have 2 monitors, so I'm having to flip to this one. Appreciate everybody being on here. That connection with the SPY's in a downtrend still. The price here was still below the 20. Look at the 20. It's pointing straight down, 10 down, 5 down. We started to get a change in that right in here, and things were looking good. And then, bam, going to Friday, falls apart, open up on Monday. What's today? Today is Monday. We're opening up today. We're kind of continuing through on Friday, but we're holding this pivot point. If this breaks, man, we got to back up to a weekly. What are we looking at? Man, oh man, oh man. I mean, juice. Look at this. We're coming into here probably. Just general idea, just general range there on the chart. You see how these zones connect. You got another one right here. These tops become support for that. You see it? Sometimes it can take you a minute to spot these. I mean, I do it a lot. And so you got a little box here. And as I draw it out, you see it. But when you're first looking at a chart, you might not see it. See this? That's 1 month sideways. This is a weekly day. Up that month, down that month, up that month, down that month, back up. You see these little boxes, right? And that's how the market tends to move. And when we get these runs, it'll run and then it'll go into another box, you know? And so as we try to spot these are the zones that become support and resistance. When they break through in the next rally up, those support zones become resistance. They flip-flop. And all it's trying to do is just give you ideas of where a stock can move. Now, if you lay over that value, you know, but right now the whole stock market's moving against us. So Bark is basically doing the same pattern as the S&P. So if the S&P holds here, Bark should hold here. If the S&P turns up, hopefully it would turn up, man. Anyway, I'll update you. I haven't closed it out yet. It's on page 11 of the newsletter. This was my original trade idea. Support's down here. I mean, that's the downside target. That's the upside target. I'm playing the continued trend to the up, but then because the SPY looked like it was turning up. And then if you go look, you know, you're like, where'd this trade idea come from? This is kind of how my mind thinks. I'm watching Chewy. Chewy's a big cap in the pet space, breaks out ahead of the S&P. A big, nice breakout ahead of the S&P. The S&P looked like it wanted to go higher, right? So if we go to the SPY, remember over here, we got this big move up. And, you know, guy be like, well, I think it's going to go down. I don't know that, man. I'm talking trading. Trading, I can only trade what I see. And this was breaking up. And this is the pattern I look for of price stopping and then breaking up. And I have no delusion of how high it goes or how low, because I'm going to use the indicators in the RSI, and you can have trades inside an overall down moving market. That's what this is. Look, the market's moving down. And inside of that, you have money flow patterns. And that's how you can get the pattern going. It'll be doing the pattern, but it's kind of leaning to the downside. You know what I'm saying? So you've got these money flow runs. This was a big one. It went from $1.40 to $2.40. Come on, man. That's a 60-70% run up. You know, and you got to know, in a penny, you're up 60, 70, you're taking some off. The RSI was screaming that. And we can still have an overall downtrend and bear market. Then price starts to come in, and then it'll bang off that, set up, go sideways, rip up. And it's like, how you know, how tight are you trading that? If you're trading, you got to be able to get in and out, man. You're just in and out. It ain't nothing personal. You know, we're not married. I'm not married to that stock. I'm in, I'm out. That's trading. I'm in, it runs up for a while, I'm getting out. Now, one problem a lot of people have, let's say you're position trading it. Well, when you get a 60% run, you say, well, I'm still underwater. Okay. And being underwater in a stock doesn't mean a stock can't go down 40%. You get what I'm saying? So if you're here and let's say you added to this, you're adding to something you're down in because it sets up and it runs up into here. You can take some off. And then maybe we come down and we set up and it's a 1 and you add some on and then it rips and you add some, you take some off and you trade this, man, and you trade around these. And some of these, well, yeah, they're going to have a downward angle a lot. Okay. And then some of your shit's going to run. And so if you're in different sectors with different stocks, they're going to rotate and change and go differently. But the idea is I can't sell any because I bought it at some other price takes you out of the trading zone and puts you in the helpless zone. It's like, okay, like you're placing some importance on when you bought something. The rest of the world doesn't care. So don't eliminate yourself from the ability to trade because you bought it higher. I've watched traders get destroyed on this. They're no longer fucking trading because they can't get their mind around this. They'll quit the group because they're like, well, I'm underwater. I'm like, yeah, bro, but you're not trading, meaning you should take some down when you have something that runs up into this because that gives you capital to buy other things. And what if you bought other things at the right time and they run up and you take some down and you're just boom, boom, you're playing this out, man. But if you get stuck because of where you bought something and now you can't play because everything is underwater, the only other option you have is to just keep throwing money into your account, man. So think on that. I know, so still playing. Think on that, man. Can't wait till you don't even know what day it is. Yeah, every day's the same, bro. I'm just looking to see if the market's open. I'm so bored lately, I'm back to betting football. I don't work here in New Orleans like I do in Texas. So in Texas, I have properties to work on. I get here, I don't have any properties to work on. I can write, but I got to feel inspired to write. I can do lives. You got to have a reason to go live. You can only do so much, man. So it's like, okay, you can go walking so much. I played all the golf I want to play. So I'm like, oh, wait, the casino's open. We can go trade there. That's where I'm at on Bark, man. I hope that helped. I went way too long. I'll try to keep these shorter, or at least try to cover the main gist in the beginning. Think on support and resistance. Anything that was support often becomes resistance on the way back up. So that was support. So once it broke it on the way back up, it becomes resistance. On the way down, we get the same concept. On the way up, we get the same concept. And these are just zones. These are areas, okay? You'll get them do it perfect. See how those hit perfect, but genuinely it's not that clean. And so you got to be a little loosey-goosey when you're looking at these. These are zones and areas. And once it can go pretty extreme on the RSI, you don't want to be, if you can start finessing this stuff, meaning you can be down a stock, it runs up, take a little off. You got a little cash now for something new. It comes in. Maybe the new is you going to buy this setup over here and you just took some off, man. Well, when you take some off, it makes this little run down a little easier, don't you think? So just ways of thinking about it. Let me give you an example of one that I'm weighing right now. ConocoPhillips. Look where we're at here. I got 250 shares of this stuff. Dividend is 1%, 1.7. We're trading at a premium. Stock's overvalued by like 20%. And it's like, is this going to be, how high do we run here? So if I go to a weekly, the highest it's ever been, man. And so I'm up like 138% or some shit on 250 shares. I had 350 originally buying these stage ones way down here lower. We were buying these. I mean, I've been buying them, so it's not just these. It's those back there, these here. And now here we are at all-time highs, and I'm up 150, 160% and getting 1.7% yield. Maybe I trim that and I roll it to over here. Kraft was trying to break out. Now it's pulling back, right? So it rejected that breakout. So I could trim that and I go look and the dividend yields 5.5%, 4.5%. I need this stop zone to hold. So I'm watching, right? Is this a good zone? This is probably a good zone to pick some up. So we're selling one that looks like this at all-time highs, right? Just trimming a little and adding to some shit that looks like this. Well, we built this up when that looked like this. Makes sense? And so I'm rolling money forward, I call it. I don't know what other people call it. And it's not a disrespect to the oil, whatever. It's like, I've made a lot of money. It's at all-time highs. Why don't we take some of that off? And maybe we can rotate. Say we take, I've made like 60,000 in that. If I took 10 and I spread some here, where else could we take it? That's going to take the yield up, right? We could roll some here. Well, MO's running on us now. But we could have the other day, right? When I was talking about it, which I did buy a little of this, by the way. So now this is running, right? This trade is running. This was one I put out the other day that you could trade it, or if you was in your buy and hold, this was your last chance. We're talking about that move right there. That's the money flow, right? So as we follow our buy and hold stocks, we can see this pattern and we can trade it. These are the ones I like to do options on because they don't catastrophically drop, man. And sometimes you can just, you're getting grinded on the price deterioration every day, but then it doesn't take a big move for them. So MO, there was the pattern. That's our stage one. So this was a trade. If we're trading, the zone's right in here, man. Remember, trading in and out. We got our target, we got our stop. Same on that is bark. Where's my support? Where's my resistance? Where's my pivot point? Am I above the 5-day? Boom, boom, boom. I'm setting all that up, and then I'm just laying it over the pattern, right? And I want to try to do as little audible action as possible. I mean, I want to let them, like right here, you could be like, well, fuck, I'm bailing on this SPY. Okay. Or we could just trust the pattern over time plays out, meaning you could be playing blackjack and you get a 15. And you're like, I just feel there's a 4 in there and the dealer has a bust hand. You're going to be a very unpopular person at the table, but you could take that card and you could get like a 4 and improve your hand. But over time, that's a horrible strategy. You just got lucky then. So I'm using this zone, man. Until it gets past there, I just trust this is okay. Right? It stopped here before. That's the pattern. So my inclination, I had a few people, and I'm not picking on you, do what you do, man. I can only teach what I teach, man. And it's like, I've got to trust that pattern because the moment I don't, if I bail on it, I'm like, I'm gonna just get out early. And the reason I'm doing that is because I'm down in a bunch of other shit or whatever reason you come up with to jump, before it's actually broke it. All you do is you just hurt yourself going forward to systematically play so that when there come a lot of winners, you get what I'm saying? Like try to systematize a lot of your stuff as much as you can in your mind anyway, man, in your mind anyway. All right, man. Appreciate you guys. Let's keep an eye on the SPY, the BART, MO. There's trades out there working. I called in the Discord that's Kraft, but I just noticed it turned around. If you guys know me a bit, I like to do most of my trades at 11 a.m. Drives people crazy. Market open, shit's going crazy. Around 11, I come in because I've watched this happen so much where some shit was about to break out and then only to watch it turn right around at 11, which I still like this move. I still think that's your target. It attempted the breakout twice now. I like that. And look, we got an easy stop loss zone. So if you're looking for a trade, I mean, 33 to 37, that's a $5 move. If the market holds and we get a little bit of a bump, that, that's been easy. That's easy. Has it ever been there before? No brainer. So that's one I would be watching. These are safe trades, man. Craft, shit like that. These are safe trades. If you do options, I'd keep them small. The market's still negative, man. So keep these trades small, but we're going to bounce, we're going to bump, and you want to play those. You don't want to be negative for the next 2 years. You want to catch some trades. Great time to practice too with small amounts of money, man. Appreciate you guys.